Hello, ladies and gentlemen, and welcome back to the latest edition of Levalytics on Video. I am your host, Jordan, and for those of you who do not know me by Jordan, I also go by Permable Nino in the Twitter sphere. For those of you who are subscribers to the channel, welcome back, and for those of you who are finding this content for the first time, welcome to the channel, and I really hope you guys love the video. And if you don't, feel free to give me feedback. I'm constantly trying to make these videos better, more informative, more actionable for everybody who's watching them. I don't want them to be a waste of time for anybody, myself included. So yeah, feel free to just speak your mind and let me know what's up. Otherwise, guys, let's get into the video. So as many of you know, normally this video would have gone out on Tuesday. However, I'm moving into a new stage of my research cycle. I'm diving balls deep into AI and how AI can level up my Levalytics analytics suite, right? And all the code and data that goes into doterminal.com, which is what hosts the majority of my data. So moving forward, it is more likely than not that I am going to begin I'm going to continue to do the newsletter on Tuesdays and usually with the video. And then otherwise, my Friday videos are just going to be market recap updates. Otherwise, there will be one-off scenarios where I find an idea that I can't get out of my head and I dive deep down a rabbit hole, and I will make those my Friday publications as well. So that is the update for the subscribers to the newsletter and to the YouTube channel. The reality, though, is that it is really easy for me to grip it and rip these videos. So the odds of these continuing are much higher, right, on a consistent basis, rather than the writing, which is a little bit more time consuming. I'll admit that the writing bit does help me provide an outline for how I'm going to go about these videos, helps me digest the content before I get into it. So we're just moving into new waters, and that's a warning to everybody. Otherwise, let's get into the video and talk crypto markets, right? So here is the BTC USD chart, right? And as many of you know that are well acquainted with the channel, the red and blue candle coloration is my trading strategy, but I don't always abide by it, and you guys will see that in my portfolio construction that I talk about later in the video. And long story short, red candles are sell candles, blue are where you start wanting to get long. And here is a zoomed out look at the price here, right? So back at the February lows, the price tagged just below 60K, right? Anything below there I consider deep value moving forward. Blue was value. 65K is kind of just like that level where it's like, all right, we're kind of back to range lows. Reality is, like, moving forward, we do not want to revisit this level as far as I'm concerned. I think if we get back down to this level, the market is going to rug deep, and I honestly won't even consider below 60K deep value anymore, because I think we'll maybe just tag, hold on one second, maybe down to 54K at that point. Let's not talk about that today, though, because that's not where my head is at, and that's not where I'm expecting the market to go moving forward. As many can see, though, we got this blue candle coloration that signals bullish momentum, right? And I was balls long, super bullish. I really started the Levalytics portfolio had started outperforming BTC and altcoins in general because the asset selection had gone very well over the past week. But then, late last week, early this week, there was a deleveraging event. Right. So what I really wanted to talk about in this article that came out on Tuesday was all the stuff that I didn't consider before the market dumped a little bit. And I think that's an issue that I have generally in my own asset management and within Levalytics asset management as well, is that I can get really excited even if the macro wise I'm really thinking that the price is going to go upwards. I don't enough times take into consideration what could go wrong in the short term, what could derail these plans, and what could go wrong, areas where I could de-risk in small ways so that way I could get more strategic positioning for what I believe will eventually be the next leg up in the market, right? So as you guys saw, blue means buy, and that's when I started adding a bunch of exposure to the Levalytics book. I was like, okay, risk on, let's do this, like let's just eventually pump, right? And I've been talking about in other videos that this zone between 80K to 100K I believe will be an expansion zone. Right, this whole area, if and when it breaks, I believe that it is going to be an explosive move, and that you're not going to have a lot of time to catch it. By the time I think when it actually happens, you'll get a move to like 85K, and I think people will be too hesitant to buy. And then a few days later, we'll be at 100K, and people will be like, "Oh my God, what happened? That's the bottom." So right now, we are in the bear's first wall, and I've said this in other videos too. Right, this is the danger zone. This is where things could go wrong. This is where I expect the most amount of resistance in the Bitcoin price chart before getting to the second wall. And I've said this before about the second wall, is that the second wall I expect to break way easier. I think once we reclaim the 80K level, I think it is going to be full speed ahead. I think the crypto markets have been completely eviscerated over the past 12 months. Not even 12 months, probably the past since the U.S. presidential election in November, December 2024, right? That was the blow off top for crypto markets, right? So the markets are just zero. Altcoin leverage is completely out of the system. Altcoins have been eviscerated over the time period. Bitcoin's the only thing that's held up reasonably well for the most part. So I think when this market gets going, it has the capability and capacity for violence against bears. It's going to be bear hunting season, which is why I think this 80K level is so significant, because if and when it breaks, I do think volatility is going to kick in for BTC, which I think will also ignite volatility for altcoins, right? There is a lot of potential energy stored in the tank here, and I think there's a lot to be potentially excited about if and when you get that break. However, that is not the case right now, right? Bitcoin's grinding up, so people do not have the excitement, the courage to be really stepping on the gas and really buying the crap out of this thing, right? I think a lot of people always get nervous on these slow grinds up because it doesn't really give people the confidence to really step into the market and start making some strong, convicted decisions, right? Really throwing your weight around in the crypto markets. So, people are just kind of holding on and waiting to see what happens, which is fine. It happens. You don't have to be fully exposed at all times. There are some people who are willing to take on risk, have more conviction earlier, which is kind of the camp that I've fallen into a little bit, despite the fact that we have some red candles here. And I actually went on the Less Noise, More Signal podcast last week with Pascal, and I told him that I believe basically if we lose 76K convincingly, but really in reality all the way down to like 75K to 76K, if you lose that zone convincingly, right? If we could have a weekly close at like 70K, I am just mega bearish, selling everything, forget it. And I think that's when that situation where you start thinking about deep value, right? It's like, okay, this market's going to rug. This was a deviation outside the range that we broke out from. And you really need to just start getting ready to sell all your crypto. And just to tell you the truth, if that occurs, I think it will be such a long period before you get a crypto revival. That's how bad I think losing this level is. And I think you sell and just forget about crypto for a while. However, that is not the case. I am still excited about this market, and I think we have potential for this explosive move up to the bear's second wall. And what I could see happening here is, hold on one second, is a move like this, right? And then sideways, boom. I don't even think it'll last very long. So that's kind of where my head is at. Not that I think that the price is just going to go up immediately from here. Maybe you get another week or so of sideways, is my guess. But that's where my head is at after this dump. So let's talk about some of the other data, though, and jump into some other charts, right? So this chart right here is the 30-day volatility for altcoins, right? The blue line is 30-day realized volatility for altcoins. The black line is a BTC USD chart. So let's zoom in on this period, right? From December 2024, like I said, which is what I think was the crypto top. It was the blow off top. Even though we had this extra second high, I'm not convinced that this was the real top. This just happens to be almost a scam pump from this point as far as I'm concerned. Let's do this though. So let's zoom in on this period for that reason. And what you can see with the blue line is that it's downtrending. I've talked about this in other videos. Volatility has just been dying out in the crypto markets. And the problem is that as volatility dies out in crypto markets, crypto markets are extremely reflexive. So once behaviors have taken a hold of the market for a certain period, for a substantial period of time, it is very hard to break them, right? So every time you get a big opportunity where you think price is it's going to break out, volatility is going up a little bit, like we had at the end of April, early May, mean reversion, low volatility environment is still the macro, right? So every time you get these big moves up, not even big move up, this is a relatively small bump in realized volatility for the crypto markets, right? It just goes back to reality because the dominating force within the crypto market is sideways. Sideways are down, right? So this is exactly what happened here. You got this little bump as BTC price got up to the 80,000s and people started to risk on a little bit. So some altcoins started pumping a little bit, right? And then, of course, back to reality, gravity kicks back in, and we are back to almost new lows of realized volatility for altcoins. So that's one thing I had to figure out and understand after the fact is that the macro environment, until you really get this huge explosive, hold on one second, didn't mean to do that. Until you get a large explosive move upwards in realized volatility, right? Where you start getting values ripping and convincing Bitcoin move from 80K to 100K, which is where I think this blue line might start moving upwards again. And by that, I mean, the only way the blue line moves upwards is that you get market-wide participation in a rally after Bitcoin pumps, right? Everyone, it's kind of the same thing as always. The crypto market just follows Bitcoin. And that's been going on since Bitcoin's inception, basically, or since the inception of the first altcoin that ever existed in crypto. It all just follows Bitcoin, right? So the dominating force is just no volatility, right? So no volatility just means mean reverting price action. So all these coins that pumped on this little bump up here, they all just gave it all back, right? So that's one thing I didn't keep in mind when I started risking on a lot. I took on a little bit of extra risk into not altcoins, obviously altcoins, into meme coins, because I was like, oh, if we're entering potentially a high volatility environment, I want to be early to own these assets, right? The problem is that when they started breaking down on lower time frames, that was a decent signal that, hey, these things, if we're having a volatility breakout, they should basically be up only, right? Especially given how battered they are and how dead the crypto markets are. I should not be willing to accept any lower time frame risk or lack of follow through from high volatility assets like meme coins. And that's exactly what happened. I paid the price for it. You'll see that in the Levalytics portfolio returns at the end of it. Keep in mind, the damage is obviously limited because half of the book was already allocated to BTC anyway. So it's not like I went all into meme coins and I got eviscerated, but I did give back some gains that I'd picked up when volatility picked up a little bit here, right? So that is the big reminder. Whenever you're going through understanding the market, trying to buy a bottom, or thinking that there's a shift in the tide, understand what the macro picture is and what the conditions are on a lower time frame, that if you think, oh, maybe this invalidates it and we need a little bit more wood to chop before we can actually get into a fun zone where we're a high volatility, upwards trending price action environment. What is your bailout? Like, how do you know that, like, yeah, don't forget that you're in this low volatility environment and you need to get out. And like I said, lower time frame price action. That is something I messed up with a fair amount of these meme coins. That is where the majority of my losses came from. Okay, next chart. So this chart shows the percentage of perpetual swap pairs on Bybit that are profitable over the past 30 days. Right. And you can see historically, this has a decent hit rate. Look at at least the greens and red, they basically always tell you when a bottom is in. Let's just even start here from 2022. Right. This is the bottom breakout. This is where you start running into January 2023 when the price finally broke out following the FTX implosion. Right. Boom. This is where you run into some trouble. This is when the banking Silicon Valley Bank crisis kicked in. Right, and you get the green dot there, boom, bottom. Top here, this is before there was a huge leverage wipeout following this period, right? Some green here as there was some deleveraging going on in altcoin markets. And then following a long period of sideways throughout summer of 2023, right, you get another green dot before you finally get a rip up. And you get this over and over again, right? You can guys, I'm not going to insult your intelligence by going through every single green or red dot. But this was a signal, right? How does this relate to the time period that we're in right now and what's going on in the crypto markets? Is whenever you get these high elevated values, usually above 80%, when you have more than 80% of perpetual swap pairs on Bybit in profit. Hold on one second. I need to pause the video. I have to take my dog out. And we're back. Sorry about that. So, like I said, the large prints up here will show you when the market is overheated or not, right? And you can see over time, it just tells you when things are starting to get a little spicy and when you need to probably start pumping the brakes in terms of deploying, especially into higher volatility assets, right? Which is where the damage is inflicted to your portfolio if you're buying these things at the wrong time, right? So you don't only need to get these red dot prints, right? The red dot prints usually occur when it's 95% of the market or more is up over the past 30 days, right? Which is a lot. I mean, that is means everything under the sun is up a lot. Not up a lot, but it just means at a minimum it is in profit over the past 30 days. And that's a decent signal to you that, you're getting late innings into the 30-day rally at a minimum, right? And like I said, you don't only need to be up 95%. Like, you can get these prints where you're up 87% of the market is up, right? And that's January 16th, Pico top right here, right? These prints can occur and tell you that you are late innings, that a lot of assets are up. When you have a lot of breadth, when you have high breadth prints for returns in crypto, generally able to tell you that something is potentially wrong, right? And like I said, because if we look at this back at this last chart, you have a high percentage of assets that are in profit and you're still in a low volatility environment. That is the perfect combo recipe for some mean reversion to dump the price. And that's exactly what we got in this little wipeout, right? Boom, we went from 88% down to 28%. So that's a good little clean out right there, which is what you want to see, to kind of get things back to a more level playing field, so you can hopefully get more continuation for price to go up further from there, right? Because, Bitcoin doesn't operate in a vacuum. This whole market moves together. So, if you get overheating going on in the altcoin space, the reality is that the crypto gods won't allow it and the market rugs before Bitcoin can start going up, okay? So, so that's kind of what was going on here, and a decent reason why there was like a sell-off. Despite the fact that you didn't get a red dot print, there was reason to be concerned. There was a high amount of assets trading in profit, and you're also still in a low volatility environment. Here is another metric. This shows the number of days in a row that 30-day returns for altcoins are positive, right? And the general feeling, you can see the green and red dot prints. Like the red dot prints are very accurate, right? You talk about areas where the market's overheated, right? Overheated February 2023 after the breakout of the bottom in January 2023 after the FTX implosion. And then this is the breakout here, December 2023, November 2023. This is after the Bitcoin ETF approvals, right? Then you had this whole period was like sideways, but there was like telling you the market's like super overheated. We actually got a huge deleveraging event here, which is what cleaned this out a little bit and how you got this little dip. And then you got one more rally to the top, right? Perfect. Boom. Nailed the top there. Once again, it nails the top also after the presidential election. It also nailed the top here around the August, late summer 2025 top before the market went sideways and eventually rugged. And once again, we got another large print here, right? And usually you need to have like 30 to 35 days in a row of positive 30-day returns for altcoins before the market is starting to reach like overheated territory, right? And once again, let's remember, we had a high amount of breadth, right? A lot of altcoin participation in the rally at this point as well. And you're also still trading in a low volatility environment. The perfect recipe for some mean reversion for price to dump. It was just late rally, and it happens to be that, when you break out of this range and the price just grinds up over time, it was kind of inevitable that we were probably going to need some sort of clean out before the market could progress more north, right, up to the 100K ranges, which is what I'm really hoping the Bitcoin price does in a violent fashion in the next few weeks. But yeah, so this is, trend duration, how long the rally lasted for. It was at that point where it was overheated. So that's another thing to keep in mind. So here we go also with leverage. This is the average OI per pair Z-score. And anytime you get red prints, it just tells you that the market's over leveraged, right? And it happens a lot, and it's not the perfect metric, but it does a decent idea of letting you know that people are slamming on the gas, right? So you also have a lot of leverage in a low volatility environment with a lot of altcoin participation. And it was a long duration trend because the price had been grinding higher. So you had just you had too many people betting on the price going up when it was already overextended in a low volatility environment, right? This was plenty of reason also to start stepping on the brakes. And like I said, these are type of things that I actually just didn't take into enough consideration before the price had rugged. I was really slamming on the gas, getting excited, think, oh, we're just gonna, these don't matter. I even saw some of these data prints, and I tell myself, whatever, my bull bias is that price is going to go higher. But you sometimes it takes a little bit longer than you would expect. Sometimes there's an extra pit stop that you didn't think about, right? And you're like, oh, maybe the market just needs a small reset, and I need to show trust myself, trust my analysis, take some off, and start watching lower time frames. At a minimum, usually I like to keep to the daily time frames, but this is one of those periods when you start to see all these things line up from all these different metrics. That's when you start, for me, that's when I should start zooming into the 4-hour time frame. Let me show you a chart that is a great example of this. Hold on one second. Let's look at SPX 6900, which is a meme coin. You can see, oh, I gotta turn this thing off. Oh my God, what is going on here? Okay, so long story short, though, this is the 4-hour time frame. This is May 12th, right? You started getting a breakdown, right? This started looking like a little distribution top right here, and you getting a slowdown in momentum. This would have been a period where, like, I actually had some SPX 69 exposure, right, you can see that the price was just blue only. This is like this period where altcoins were popping off and you started getting overheated prints from the market at large, right? When you start getting prints like this and it starts to look like distribution, that was my signal to get out. Instead, I wore it and it just rode the price all the way down here, and I just gave up on the trade. I was like, you know what? This trade is not the exact same trade that I got into the position for. I'm no longer excited about it. I think this thing needs to regroup before I even consider buying it again. And yeah, it was just a mistake. You live and you learn. And this was an opportunity for me to learn. And that's what's nice about writing the newsletter, doing the videos. It gives me an opportunity. I'm not perfect. So I'm kind of learning along with the audience, my readers as well. So that is something looking back on that I won't make that mistake again. Well, I will try not to, right? At least I'm crystallizing my thoughts on some of this stuff into video form. I did it in the newsletter and written form on Tuesday, but yeah, so that's kind of where my head is at, where I could have fixed these things when I saw, people are levering up. That's not the right one. People are levering up a lot here, right? And this is you started getting the high open interest prints on May 7th, right? So you had this like 5-day period where it was like, okay, there's a lot going on here. Maybe we need to clean this out a little bit. And then eventually you start getting the breakdown, right? May 9th. Yeah, it's like up here is where people are starting to lever up. This whole move up is all a levered move, right? And then on the back end, it's like, oh, maybe it's time to start selling a little bit, right? So yeah, that's kind of another thing to look at. So that covers that. And then this shows the percentage of perp pairs with an increase in open interest over the past 30 days. And the simplest way you could break this down is that anytime you get values below 50%, that means it's a deleveraging event, right? So good examples of this are just the green dots on the chart, right? After the early 2024 run-up, after the Bitcoin ETF got approved, deleveraging event. You actually got one. Here's the deleveraging event in January 2024 after the initial ETF run-up. Here is the post-Trump inauguration deleveraging event. Here is the October 2025 deleveraging event. These are huge ones though, right? This is when you have periods where you have like only 20% of pairs having an increase in open interest over the past 30 days, right? That means 80% of pairs have a decrease in open interest over the past 30 days, right? This is not the same type of move. And I don't know if the market has the juice for this type of move, if you want my personal opinion. And the reason why that I feel that way is that the market is just completely deleveraged. If you really zoom out, hold on one second, I'll take you to Dude Terminal really quick. Let's go over to open interest here. Right, so here is the percentage of pairs with OI less than 10 million. 88% of pairs have an open interest less than $10 million, right, on Bybit. The last time it was this low was basically January 2023. So this is a bear market, right? When you start getting low values, that means a lot of assets have high open interest values. And that's what we had at these two tops right here, right? In March 2024, we also got it in December 2024. So yeah, I just don't think the market really has that kind of juice, but that's, hold on one second. I need to pause the video. My dog is freaking out. But yeah, sorry guys, I'm back. But yeah, I just don't really think the market has the juice for that. But what you really did have on this move is from May 9th, we had 60% of pairs that had an increase in open interest over the past 30 days, and it dropped all the way down to 40. So you like 20% of pairs got cleaned out on this move down, which is a healthy move down. And if you really want to just look at like, okay, did values go below 50%, right? We can look back here, October 2025, right? Boom, went all the way down below 50%. And then the other time we had a move below 50% was late January, early February into this dump right here. So we had it here, right? And then you had it here, and then you had one here, right? And this actually looks a lot more constructive, right? Like this is just a market constantly in the state of rugging while you're getting these deleveraging events, while people were probably getting a little too excited thinking that we're either going higher here, right? A lot of people were levered up at the highs at 125K and the market just giga rugged. And then down here, it's a lot of people probably capitulating where they thought the bottom was actually in around the 80K area, right? But, then we ended up breaking down to $60,000, right? So what we have here is people trying to buy the breakout on leverage and getting steamrolled, right? So this is a possibly... Sorry for all the pauses, guys. My puppy's 15 weeks old, so just gonna have to bear with me for this video. And I'm the only one in town to watch it. My girlfriend is on a trip out of town, so... We're just gonna have to deal with it for today. But yeah, what I really need to do for this chart is just draw a horizontal line through 50%. I think that would provide a lot of value for readers. And you can start doing calculations where I calculate the number of days in a row that values are above 50%. So you can really start to see the leverage buildups, right? Because when when you have a lot of days in a row where most assets have added open interest to their perpetual swaps market, it's a reason to get a little bit nervy, right? So these are just a few ideas that popped into my head after doing this analysis and this newsletter. But yeah, big clean out here, right? And like I said, the third clean out over this entire period since October 2025. And then once again, I've talked to you guys about this metric before. This is the median funding rate for the top 10% most expensive perpetual swap pairs to trade on Bybit at any given time, right? And these are, the biggest bulls in the market. These are the people that are willing to pay the most to be long, right? So, basically, if you ever go through periods where it's just completely flatline, there's really nothing to get excited about, right? Because even if these guys are not even willing to pay some sort of expensive funding to get long, that means there's zero risk appetite in the market. And usually for crypto, that means down, right? You had this whole period from 2022, the top values were negative actually during some of this period, which is crazy. But the next time, from December 2021 down here, all the way to January 2023, where price finally broke out. That is an entire bear market right there, nonstop of nothing. And then April 2023 right here, all the way to October 2023. Price didn't do anything excited. Nothing happened here. Altcoins didn't pop off. BTC went sideways. Price breaks out. Boom. Action. Right? A slight period, January to February 2024. Boom. BTC breaks to new highs. Action. People start slamming on the gas. So you really do need to keep in mind what these people are doing at any given time. And that's why people find this, I think some people might find this a controversial opinion. You want to see some people being willing to pay to be long. Right? People usually associate people paying expensive funding as a bad thing. It's like, people are too bullish. We need to liquidate them all before price can go up. It's like, yeah, maybe a little bit. But there also is an element where in really bullish market conditions, when there's high volatility and prices trending and there's FOMOs in the air and there's things to be excited about, you want people to be willing to pay to be long. That means that there is demand, right? And that's what we had, right? People levered up a little bit on this move up. And, this is one of those situations where probably people would be like laughing at me and be like, oh, people got long and excited and then the price dumped. That did happen, right? But the one thing that I wanted to talk about in this video and I talked about in this article is that this is how people got cleaned out, right? It went back to flat. So after this move down, the most expensive funding is just flat, right? So that tells you that this was a high quality clean out. If this was still elevated despite all the, changes in OI that we saw here and in this chart as well, then I'd be like, it wasn't, maybe we didn't, neutralize enough bulls. But in this case, I think it happened. Let's zoom in a little bit right here. Right? See? Zoomed in. May 17th, whenever that is. Yeah, like right around here, price, bulls got neutralized. So, that's how you know it was a high quality clean out for the crypto degens. Okay, so here, this shows you the portfolio construction for the Levelytics portfolio. Like I said, when we got that the blue candle print for BTC, right? Let's go over here. Not the 4 hour, let's go to the daily. Okay, daily started getting blue candles, right? Around May 3rd, May 4th, right? And that's when you can see I started tacking on exposure into the market, right? And this is, this period where I'm at zero, though, was when I really started reshuffling in terms of getting into higher volatility assets, right? Because if you think the market's going to go up, obviously you want to own the highest volatility stuff because that's the stuff that's going to pump the hardest. And this is when I jumped into meme coins. I started increasing my exposure into assets like Virtual, which is the largest AI coin to my knowledge. So that's when I reshuffled the book into higher risk, right? And that worked out for a little bit, right? But then I eventually gave it all back. And keep in mind, I dropped all the way back down to 36% exposure, 36% cash in the book. This line shows the percentage of my portfolio that is in cash, right? The Levelytics portfolio. And now the Levelytics portfolio is 26% cash. So basically 75% exposed to the market. And at this point in time, the Levelytics book is exposed to Hype, Near, and Zcash. and they've all performed pretty well, right? Because you can see, the blue line at the top is the Levolytics returns since Levolytics started trading. Green line is the BTC returns since Levolytics opened, and the red line is the return of the altcoins that the Levolytics book has traded. So most of these altcoins are down 60% at the moment. Levolytics is down 22%, and then BTC is down 34.4%. So the good news is, you can see the pop, lesson learned, and I reshuffled the book back into assets that I thought gave me good risk reward combo, right? The near chart looked really strong. The hype chart looked really strong, and the Zcash charts looked really strong. And, here's some examples. Here's Zcash. Right? Blue, this is when I started buying Zcash again, right around $350. And this, my trend trading indicator, my momentum indicator, which is on dudeterminal.com in the momentum indicators category. Hold on one second. I'll show you guys right now if you're not 100% sure where to find it. Crypto charts, indices momentum trading, right? This is where you can find these. And you can find it these are different tradable categories. So for example, go to privacy momentum trading. At the top, you have a table that shows you which one has a blueprint at the moment. And it's just Zcash of the privacy coins. It's the only one you want to be long. And if you press the open button, right, zoom in here, this is the entire rally. Boom, there you go. Here's the data, right? So it tells you when, that this is the same thing. I have a few extra little gadgets on mine on TradingView, which is why I don't share it with people. But yeah, so here's Zcash, right? That's an asset that I got long. And then where's hype? What I ended up doing with this trade here, I added a bunch more hype to the Levolytics book. This red candle right here, this was the day, these two red candles here was Coinbase adding, getting involved with hype, making the announcement. And there was like some regulatory crap announcement that came on here that dropped the price a bunch. And then once you got this blue candle that reclaimed it, I was like, okay, the hype has not been an asset that actually trades particularly well with this momentum strategy. You can see it's been just super choppy for the most part. So it's not really much to get excited about, but it feels like it's been boiling. So when I saw a blueprint after all of everything that had happened, I was like, there's a lot of action going on here, and it is showing lots of momentum. I think this is a good opportunity where I think momentum's going to break out. So I added it. I think it's maybe the biggest position in the Levolytics book. You can check the newsletter at levolytics.substack.com if you want to go see what the position size is. Yeah, it's like pretty close to the same. It's pretty much tied with BTC as the largest position in the portfolio. Now that it's pumped, it's probably more than that. But yeah, so this is blue, right? So I'm just showing you guys how these momentum indicators work for these assets. And then here's near. It's up 14% today. Blue candles ripping, right? So these are assets that are just happen to be trading particularly well. There's a lot of other assets that are like they were showing signs of life, but they're just not quite there. So here's an example of, never mind. Let me go to. At one point, I was holding Pengu, right? Because I was like, oh, this is one of the better performing meme coins, so that's something to get excited about. But you can see, right? Around May 11th, this is the whole period up here where people were getting over leveraged, and you can see Pengu was going sideways for a while. It started printing red candles. I was like, a loss of momentum. I remember seeing that as a red flag, and I still held on to it. I didn't sell it, I think, until here. Sometimes I just miss it. I was like, oh man, I forgot to look at this chart today. But yeah, I don't really want to be holding these meme coins when they don't have momentum, especially when the market's lever. We're in a sideways environment. We've been in a sideways environment since the U.S. presidential election in 2024. So yeah, this was a mistake. And this was a decent sign because Pengu is considered a category leader within the meme coin space. So if this thing is starting to go sideways and start printing red momentum, I don't really want a part of it, right? And I should not have wanted a part of it. But these are lessons that you have to learn. And the unfortunate thing about trading and managing assets and managing risk is that you can't paper trade this shit. Like, you have to actually lose your own money. And, keep in mind, I've been in crypto markets for 10 years. I've only been probably actively trading for 5 though. Not 5, 4 years. Actively trading for 4. I was like an analyst for another 4. So you have to go through so many painful lessons over and over again. Sometimes you have to make the same mistake like 10 times before you actually learn the lesson. And that's the nice part about the Levolytics YouTube channel and the newsletters that I also get to learn along with everybody else, right? I get to crystallize my thoughts, get to understand my strategy a bit better, get to talk my way through my thoughts, my understanding of the markets, and I also get feedback from people along the way too. But yeah, I mean, this was a good reason to get out of the market, which I did not do that though. Hold on one second. And yeah, otherwise, yeah, the Levelytics book has performed pretty well, down only 22% since inception. And I'm feeling pretty good about things right now. And I really think, I've said this in the newsletter. I said it on Pascal's podcast, Less Noise, More Signal, that came out today, actually, that I really do think that, let me go back to the BTC chart, actually, just so I can close out this video. I think this is the danger zone. This is the tough place where I think there's going to be some chop. I don't love that we have red momentum for BTC right now. But I really do think that there's going to be an explosive move up to 100K. And like I said, if we get a move that's convincing, if we get a weekly close below 75K and, let's just say we get a weekly close down to 70K, I think it's over. And I think you really just go think about anything else besides crypto, move on with your life. And maybe by the time you have gray hair, crypto will pump again. But yeah, guys, I really appreciate you guys tuning in as always. And I'll be back in touch with you guys on Tuesday with a new article and most likely a video as well will be coming out with it. Peace.